All right, welcome to the Real Estate Life podcast. On this podcast, we are dedicated to creating a life of passive income through real estate and doing something that we love along the way. And today we have Scott Choppin. He is founder of Urban Pacific Group. Scott has over 35 years of development business. His track record includes over 3,400 units he's developed and has successfully exited over 900 million in sales. Scott, thank you for coming on the show.
Yeah, great to be here, Abiel. Appreciate the invite.
Scott, so we're definitely in an environment in real estate where developing has become even more popular than ever. Prices have skyrocketed, and I'm seeing a big trend where now it just makes a lot more sense to develop than to buy these existing homes because the prices are so high. Is that something that you're starting to see?
Yeah. So, as before we were recording, we're not traditionally an investor. We're, solely and exclusively a developer. And we're always tracking those two parts of the marketplace. Like, in the way I think of it is like, in a down market, you'd buy below replacement cost, right? Like you would buy at a discount, an existing asset at a discount to the market value below replacement cost. The development model is the opposite. That's building or buying at above, replacement value, meaning it's more valuable when you finish it than it cost you to build it, right? So that's definitely the market we're in. And then, value add would be in a range or a spectrum in between those, two extremes, right? Of like discounted to the market and above market. And then it's just a function of how well can you buy the value add asset. And yeah, I talk to investors all the time who are like you, sort of like looking at making a move from value add, can't find enough deals or deals that are sufficiently profitable enough, or both those things. So, moving into the development marketplace makes sense. But, the market is cyclical. So, at some point in the future, that will reverse itself again.
And how did you get into development?
So I actually have a family background in it. My dad and my uncle Mike were both real estate developers in their own right. So basically I have a family history of it. And sort of, I guess, natural, meaning development isn't a career that you'd like wake up one day and go, oh, I'm going to be a real estate developer. I figured it out. I had the book at the library, How to Be a Real Estate Developer. It's such a, obscure. I think real estate investing and multifamily is obviously a smaller sector of the marketplace, but then development's even a smaller subset of that subset. And so I had the family background, which gave me, a general idea and understanding of what real estate developers did. But then, I'll share with you when I was 18, didn't really have necessarily a career path picked out at that point in time, wasn't, ambitious at that point to go to college, ended up working in the construction trades for a couple of years. But during that time period, I was reading as I still do. And I came across a couple books, basically, just general old school real estate investing books. And those were key for me because that really finally opened up for me what it was to do deals, to be a deal maker, and what it meant to do deals. Like you buy low and sell high, right? Like classic old school stuff.
Yeah. Which
and
book
development.
Was it? Which one pops out?
It was the title is How to Make $1 Million in Real Estate Investing on the Weekends. And actually I need to go find that book because I talk about it and I go, I should revisit it. But it was one of those classic 50s era, how to, today there's so much more, Abiel, right? YouTube and books, and we got people on Twitter and LinkedIn, right? But back then it was pretty what you had to find was there was 8 books all, that existed in the marketplace. But that was really what finally gave me the sense of what was the meaning of development? Okay, yeah, it's build buildings, find land. I knew that part from being around it. But I go, oh, here's what you could do from a profitability standpoint. Here's how you could be an entrepreneur. Here's how you could use your creativity and your ability to innovate and solve problems and make a lot of money doing it. In the short story of that.
Yeah, no, definitely. I was going through your website and you have something that really caught my attention, and the multi-generational workforce housing. I was trying to understand what you meant by that. And of course I started Googling, now I kind of get a grasp of it, but I want to hear from you. What is this multi-generational workforce housing that
Yeah.
you talk about on your podcast and on your website?
Yeah, we've been a apartment developer really for 21 years now. So this year, March was our 21st year of operations. Always focused on urban environments, so wanted to build inside of existing neighborhoods and cities. Have done various product types. Really, the vast majority of our track record is building new apartment buildings, right? As a developer, about now going on 5 or 6 years ago, we finished a series of buildings, and we're really looking for something different to do, right? Like we sense there's a lot of new multifamily coming on the marketplace in this, period 5 or 6 years ago. And so in my background, I had done work in the affordable housing industry, right? Like government subsidized affordable housing. And from that era, I knew that families were always under a lot of pressure from the incomes that they generated versus the housing costs. And we're in California, which is the most extreme, differential between housing costs and incomes. And so we started to think about this idea of creating a housing product that could bridge that gap. So the gap between luxury housing and the cost of that, and true affordable, which is government subsidized, but always limited. There's never enough of it, right? And so we started thinking, well, like middle income, workforce housing, working class, maybe blue collar housing. There's different ways to describe it. So we ended up settling on a particular product type that we invented, which is a 5-bedroom, 4-bath rental townhouse. And it's a 3-story townhouse, 5 bedrooms, 4 bathrooms, 2-car garage. And the thing we really talk about is it's built, designed and built to rent, but lives like a house, right? And so we sort of combine several things together. So it's giving renters the ability to rent a unit that lives like a house, right? Like which everybody would prefer if they had it, has multiple bedrooms and bathrooms, which allows their family to live together under one rooftop, i.e. multi-generational. It's middle income, so it's really fits from a cost standpoint, that demographic that sits in between, people that are, subsidized housing and the luxury. And so we really refined this, what we call urban townhouse, that's the name we gave it, into this multi-generational, multi-earner, working class housing model. So multi-generational means 2, 3 or more related generations living in one household. Yeah. Multi-earner means that those households combine incomes and expenses, what I call economic sharing. So they have multiple earners in the household. And so that combination of multi-gen, multi-earner basically has a different model than what you typically read about, right? And you read, in the Wall Street Journal, and they're like, oh, a single income, somebody needs to make, X dollars an hour to afford an average unit. And that's true. But what that doesn't accommodate, or what that doesn't calculate, is if a family comes together and has 4 income earners and they decide that it's, good for them, or they already,
Right.
live multi-generationally, this gives them a much more powerful capability of living a good life. All we're doing is supplying them this unit type that allows them to do that under one rooftop.
Yeah, it's it's a genius idea. It's actually something that I'm so surprised architects and developers hadn't done in the past. I mean, I grew up in that environment. I grew up in that environment where converted garages were bedrooms with wet bars and kitchens, and families would get creative and do these things illegally. And by the cities and developers pushing this product and allowing it to be done correctly, it'll avoid throughout the years of other families doing this illegally. So that is a trend. I think there's a development here in Miami by Lennar Homes. It's beautiful 4-bedroom houses, and then it has an in-law quarters that they're starting to push on the development side, which I had never seen before. They're not pushing kitchens. They're putting like this wet bar, not the stovetop, because there's some regulations here in Florida where they don't allow that in some places. And when I saw that design, I'm like, I'm Latino, so we've been doing that forever. We've been sticking those in-law quarters, everywhere.
That's right.
So it's now, to me, is genius that developments are now, embracing that architectural design, and there's a huge demand for it.
We're tracking constantly. I don't know how much the development marketplace has really caught up to it. I mean, we do it, Lennar. Actually, we see more. Actually, in fact, we we do a ground floor bedroom bathroom out of the 5 in our units. We always do that ground floor bedroom bathroom as an acknowledgement of the, grandparent or older in-law. And I actually got that idea from some condos that were built here locally in a city called Torrance, and they all had ground floor bedrooms with a bathroom. And I was like, wow, man, that's super smart. And I was asking the sales agent, I go, are these units, like, do you have demand for them? Because it's not typical. She goes, oh, this is our best selling unit, like hands down.
That's gonna be a trend, man.
Yeah, so we've adopted several characteristics of it, but I'll go here with it just to follow up with what you're saying. Culturally, the world is more doing this than what we do in the United States. Like, if you looked at people who live multi-generational around the globe, it would be the more common way that people live, both traditionally, historically, and today. And that in the United States, even in the pre-Civil War era, living multi-generationally was more common also. It was only in this sort of 20th century nuclear family era that the United States really got this, that had the economic capability for people to be wage earners and afford to live separate from their family. Like, oh, it's mom and dad and 2 kids, right? The classic nuclear family. But in reality, both culturally, it's the norm, but also in today's environment, economics are now requiring that people combine together to afford, right? If incomes are flat and housing costs, in fact, there's a graph that looks like this is incomes and this is housing. Our housing serves that gap, right? And so one of the ways, not the only way, but one of the ways that people do this is by combining this, this economic, these incomes and expenses together. But that's really historically and culturally across the globe the norm. It's just the United States is maybe starting to adopt that for its own reasons.
A lot of the student housing layouts kind of would work for this model.
Mm-hmm.
They have the 4 bedrooms, the 4 bathrooms. They're large units. Does your layout have a separate entrance for that unit?
Yeah, we haven't done that. And our unit is really meant to build as cost effectively as we can. I mean, that's the development model generally. But we would need some logic. So Lennar has, in fact, the units that I saw, they didn't have a separate entrance, but my reading suggests that the Lennar model that you saw is more typical, because what you're getting is maybe people who are, born in the United States, and, the idea of, living with your mom and dad is sort of like, what? I'm not going to do that. So the idea of having to have these separate but combined, hey, you can go in and out independently. But, I think most families that live this way, like, that's not a necessity. And we've had it's not been detrimental to us at all in our leasing activities to not have a separate entrance. We certainly could, but for all intents and purposes, because our unit's on the ground floor, it's the only living space on the ground floor. And you come in the door, you go down a hallway, you go up the stairs, and then right beside the stairway up is the door into the bedroom bathroom. And then we have the garage on that same floor. So it really is sort of separate in the context of it's the only unit. Now, obviously people coming in and out of the house are going to go by, that bedroom. But we're really not, there's no economic reason for us to have a separate entrance. Like, we wouldn't get any more rent. And that's, an economic calculation. In Lennar's standpoint, they could probably, get a higher price for having that separate entrance. I would speculate. I don't know for sure, but, there's some economic logic for it. Either if they didn't have it, they couldn't sell the unit, or because they have it, they can get, a better sales price because, there's this separate entrances type thing. That economic, calculus doesn't, enter into, our tenants that live there that won't pay any more rent.
What's the ideal square footage on that townhouse?
Yeah. So what's interesting, it's a great question. So traditionally our development projects over the last 21 years were a lot of podium and one-off design. So we would find a site and we do its own, standalone design, never to be repeated. In the UTH model, we went about it in a much more we wanted to be production oriented right out of the gate. So what we do is we have 2 different 5-bedroom unit types. a regular unit, what I call the regular unit, and then what I call the sideways units, just the same unit turned 90 degrees. And really all we do is we basically lay this unit out on a piece of land such that we use that unit type over and over again. Maybe it's it's a 3-unit building, maybe it's a 5-unit, 10-unit on bigger projects, but it's the same unit over and over. 1,750 square feet, 5-bedroom, 4-bath, 2-car garage, 3-story townhouse. And we really want to do that as much as we can, because basically that allows us to increase efficiency in our construction operations, both in managing the construction and then the build process with the subcontractors. It's the same unit. Again, that production orientation, like a home builder would, right? You just do that unit, same unit over and over again.
Copy and paste,
Yeah, copy and paste.
How many of these have you developed already, Scott?
So we're on our, last account, we're on our 8th project in the UTH, business plan over that, that 5+ year process, period of time. The first 4 projects were what I call the demonstration phase. So we did small and mid-sized projects really to test the model, right? We wanted to make sure that we didn't get too far ahead of, our capability to execute on the business plan. So we did some small projects and really purposely did them to learn. How could, what does it cost to build it exactly? How much production efficiency can we get? What's the real rent that we can charge, right? What's the real value? I mean, one of the things, 5-bedroom apartment units are so uncommon that when your appraisal comes in, the appraiser's like, dude, there's no comps, right? Yeah. Either in sale or rent. And so we've had to create the market really. So we did this, for the first probably 2 years, we did this demonstration phase. We've completed that, proved the model. I think our portfolio returns on sale were about 23% internal rate of return to limited partner capital.
That's nice.
So we proved the model. We learned how to do it. I mean, we're always learning on new projects, so that never stops. But I wanted to make sure that if the experiment failed, right, like UTH, Urban Townhouse, turned out to be an utter failure, then we go, okay, good. We learned that lesson. We'll move forward from there. It turned out to be actually, really healthy, a really good business plan. So we're now growing. We're in our production phase, and several more projects into the business plan. In fact, we're right now raising an equity fund in order to serve basically a series of these UTH projects.
Are you staying in California with this, or you're thinking about investing in other states?
Yeah, so we're thinking of, we're focused on California. It does work in other metro areas. So this is a product that really needs to be built in metro areas. So you can think like Portland, Seattle, Denver. We've looked at all those markets. The model would work in any of those markets. If you get outside of a city, metro area, the rents fall
suburbs,
off that it doesn't work, and that's fine. This is a working class family housing type, which is where cities are going to be where those folks are.
I like that you have the exact clarity of what the product is and where it needs to be. A lot of folks sometimes say, oh, you can put this anywhere. No, you know exactly where it needs to go.
Oh, yeah. I'm real effective brokers. I drive them crazy because they're like springing me stuff. And one of the things is our product wants to go in B and C neighborhoods, right? So it's an A product in a B and C neighborhood. So the brokers are always bringing me like the hottest new thing. And I go, dude, no high-end neighborhoods, no sexy gentrifying neighborhoods. I mean, those are appropriate for a specific demographic, but that's not where families live. That's not where they gravitate. It's higher land costs, more challenging, entitlements, governmental approvals if you're going to do that part, that kind of thing.
Yeah, in a class A neighborhood, I could see the challenges you would have with the city, and the current owners in the area. They'll give you such a hard time. Yeah. So that's
our B and C neighbors love what we do. They're like, great, man, this empty lot that's been a pain in my butt next door to my property. Great. You're going to develop some new units. In fact, we get neighbors that are like, when can I apply? When can I move in?
Do you see this being as a project where someone will say, build me 100 of these, or you see that being way too challenging? It's more,
we're right now in our production phase, and the sizing we're using for the capital raise that we're going through with the equity fund, we're between about 20 and 85 units is the range. And that's just functionally sort of a mix of land sites that are available, the sort of density that we can get, the geographic area. So partly to answer your question, we're really focused on LA and Orange counties right now. In fact, this first fund that we'll raise will be entirely based, and focused on that area. We're certainly think that there's bigger projects, we're going to take bigger projects on. We may phase those. So like we have an 85 unit project as our biggest to date, and that'll be a 60 unit first phase and a 25 unit second phase. And we're various reasons why we're doing that. But I think once we get into that 85 plus, so we'll definitely be aggressive about phasing it. But two is the density of people in these 5-bedroom units, as you'd imagine, we get a lot of people in a space. So I start to think about more and better amenities. So like our 85 unit project, we're, developing a 1 acre park next door, actually, that we're co-developing with the city. And that's, the project will actually have direct accessibility into the park as our amenity in essence. And so we'll start to think about more and more of that. But in reality, the demand and the need for this sort of middle income housing is so great that we don't see any, there's no lack of demand going forward, probably at least, 2 decades out, just given what we produce annually as a state. It's very difficult for us to catch up, probably impossible if you look at it. So we just see, long runway of, need. And I don't say it's great to have families that need this housing. That's just the reality of it. They do need this housing. They're here, they're working, they want to live a good life. They have their families with them. And so we just say we're being responsive to that particular part of the, the demographic and market segment that really everybody else is ignoring. We're happy to be.
Well, I like the fact that you're just not doing what everyone else is doing. The standard 3-2s and the 4 bedrooms or there's 2 bedrooms. So you're finding your own niche. It's gonna be consumed. I mean, I've rented 4 bedrooms and 5 bedrooms. The 5 bedrooms weren't legal in the past, and we've done a lot of Section 8. And I can't tell you how many families in Section 8 would love a product like this.
Yeah.
And people would be surprised how Section 8 probably pays market rents for a 4 or 5 bedroom. They just wouldn't believe it, but there is a huge demand in that sector.
So we see that in California, by the way, that FMRs are like
you do?
Slightly above or equal to market
It's
rents.
incredible. Yeah, it's incredible what the government pays on that. And there's just families with just 4 or 5 kids. That's the kind of,
Well, imagine, I mean, you've done this, but here's my observation. Like we actually Section 8, we'll have 5 to 10% of our units that pretty much as a standard go to, affordable housing or Section 8. And my mentality is that, like, think if you're a family of like 6 people with a voucher, dude, it's like, it's impossible to find housing. I mean, I don't know what it is for you guys, where the markets that you're in, but the turnover rate for new voucher holders in California is like 40 or 50%, meaning 50% of all the vouchers they give to people can never be utilized because they can't find housing to use it for.
Wow.
And those, and probably same as you guys, like, dude, our waiting lists in some cities are like, a 10-year plus waiting list. Yeah. So we're like, sheesh, man, we could do all our projects, all Section 8. I mean, we're not going to do that necessarily for various reasons, but, we're super enthusiastic about having, 10 to, 15 to 20% of our units be affordable or Section 8 or
you're not going to have an issue with the absorption rate.
No,
definitely is not going to be your issue.
It's like the demand's even more like in that space. If you're a family, I mean, it's a small component of Section 8 families, but it's families, then some in the Section 8 markets, definitely.
I mean, Scott, now I mentioned to you before we got on this call, we're going into the development business also. And we have identified a townhouse community that we want to build on. So someone like me that's, it's as an educated investor in my own space that wants to take that leap of faith into developing or partnering up with a development. What's your advice to someone like me or someone that's trying to get into the space and partnering up with a developer?
Yeah, great question. So I think of this question, Abiel, in really 3, what I call 3 pillars. And these are pillars or sections of the development and investment space that sort of are overlapping, and then parts where they don't overlap. First pillar is what you already do in your apartments, and what we do is you got to research the market, What are the demand characteristics? Where's the market deep? Where is it shallow? Is this a good city? Is there a good job base, right? Just underwriting the apartment market for demand and rents and operating expenses would be in there. So general apartment deal underwriting. So that's pillar one. Pillar two is zoning, new construction design, building a new building, right? All that, this is where the biggest gap is for investors moving into development space. This would be the pillar that they know least, right? If I'm going into a new market, what kind of bedroom count, what is the right, size of unit, right? In this case, like I had a guy come to me with a deal and I was asking him, hey, how did you come up with that design? It was all 2 bedrooms. And he goes, well, because, everybody else is doing 2 bedrooms. And I'm paraphrasing. And I said, so you picked your unit type because that's the most of what else is in the market? He's like, yeah, that seems like that's the best. I go, no, that's actually the opposite. You can't go too extreme, but sheesh, for us, 5 bedrooms is pretty extreme, right? You want to be doing what others are not and still in a market, segment that has demand, right? So pillar 2 is building new buildings, government entitlements, and that kind of thing, zoning, et cetera. And then the third pillar is basically valuation, right? We're in this business to produce profitable projects, either in a refinance scenario for long-term hold, or if we sell the property, we've made a profit for ourselves and investors. So the first and third pillar are common to both development and investing or value add, right? It's that middle pillar where there's usually the least knowledge from somebody who's moving from investing to development. And so there's several ways to go about it. You'd mentioned that the folks you're working with on your team have experience themselves. So if somebody is looking to move in development, my advice is always go joint venture with somebody. And with the specific request, hey, I have this land deal or I have this deal, you guys bring your part, I'll bring my part, we'll come together, and then specifically say, I want to learn. Let me go to all the meetings. Let me, be on the phone calls. Let me, sit on your shoulder and, soak it up. Watch what they do.
Be part of the process.
Be part of the process, right?
Yeah.
Read all the documents. Hey, why are we doing that? You may drive your partners crazy a little bit, but that's fine. That, if you got good partners, they'd be happy to do it. I have people who regularly intern with us, with our company or Pacific, who are looking to move. These are usually younger folks. They want to move from a specific career that they're in into the development space. And, people come to me, hey, I want to get this master's degree, or I want to go to this college, or even, I'm going to buy the guru courses, although there's not a lot of that for development. I go, come and spend a year with me. Come spend a year with Urban Pacific and our team. And you'll learn more than you would ever, know in any classroom, any guru course, any book that you could read. It's all about basically hands-on, problem solving, follow up, how to really project management, for lack of a better way to call it.
I agree with you on the joint venture part is probably the way I've learned most of all my transactions, and exactly how you expressed it. If you want to get into a business, joint venture is probably one of your best ways, and just be part of it. Be part of the whole process. Be copied on every email. Ask a bunch of questions. You don't want to annoy too much, but it's okay. It's all right if you're putting the deal together and you're raising the capital and you find an amazing, piece of land where you're gonna, make things happen. Mm-hmm. Joint ventures is the way to go. Now, it's the hardest part, I think, is finding that partner.
Yeah, it's got to be the right person. Because some developers, actually, I would say most, are like, no, dude, I'm not going to tell you how to do it. They don't want to create the competition, but there's a lot of people out there. I mean, you're like that, I'm like that. And, I want to find good deals, and I want to develop people that are part of my networks, and hey, look, let's work together on this deal. You figure out, you see how it works, and then let's go, you find more deals. So we could create, as the developer who has the experience and maybe the capital and the resume and the track record, I want to have 10 people that go out and know how to do it. I mean, eventually they're going to go do their own deals. We understand that. But in the meantime, and if I am a good partner to them, keep bringing me deals more and more, right? You know how to do it now. You know how to talk to the city. You know how to ask about zoning. You know how to underwrite the deals, run a pro forma, bring me a fully formed deal, and then we'll do it together. In fact, I have a guy who works with us now. He's basically a project manager on our team. He came to me through, like, he found me on Bigger Pockets, where I've done a lot of writing and, about the development process. And he's like, hey, I got this deal. And in fact, we're about to sell it. And, he's probably, I never asked how old he is, but he's probably in his early 20s. I mean, he's going to make more in this deal than, he's probably ever made in his entire life times 100.
And I tell you, if he's doing the project managing, that is probably the fastest way to learn anything in real estate.
Yeah, he's a good dude, but he's getting beat up. It's like, oh, come on, right?
But I've worn that hat many times, so that's how you really get schooled in this business real fast. Project managing,
it's the best way to learn. It's hard, sometimes it sucks. You go, oh, dude, made the mistake, and like my job is to teach somebody and our project management staff. We're always learning, but not to make it like a fatal error, like in the project, like it dies. So that's the balancing act in that process.
Scott, we have I'll leave you with the last question. We have a question we ask all our listeners, and it's just always interesting to hear what they have to say. And I just want to ask you, what does financial freedom mean to you?
It's a great question. Simplistically, it would be having enough money, right? Now that sounds like a really basic answer, but if most people, they don't know what enough is. Like, what's the actual number that you would need to have to take care of, your future self, right? So what I do with people, and I've done this with myself, and I'm, an ongoing process, and I actually learn with a network of people who sort of operate this way and think this way, is it's like, what's the number? Like, when you turn a certain age, pick that age. Is it 45? Is it 60? Is it, whatever age you decide that you want to be done, and figure out what you need from an income standpoint when you retire, if that's what you're going to do, or when you want to be at that point where you have financial freedom. So there's really thresholds or levels, right? So enough to take care of your basic household, right? That's what I call survival, right? And that's enough where if you have a amount of money invested, so where you don't have to draw down your capital, where it's spinning off enough, return every year that you could basically live off of it and not have to work. So that's, survival. And then there's basically what I call freedom, which is a larger number, which is basically you can live with really no constraints. You're not living a luxury lifestyle, but if you decide you want to buy a new car, or you want to take that trip, or you want to, buy a house for your kids, or you want to, pay for that, big wedding for, your son or daughter, like, you're not constrained that way, right? You're not eating caviar for breakfast and living on the super yacht, but you don't have any real constraints. So those two thresholds is really where I sort of operate is, first take care of your survival. And I don't give a number because everybody's number is different, right? If you're 20 and you're starting, well, then you have a long runway to invest and compound, but you also have the most inflation to deal with. Somebody like me, I'm not at the end of my career, but I probably have, 8 to 10 years in my timeline where I want to finish and really not have to worry about it anymore. And really, it's not only to take care of your life now, but it's also to take care of your future self, right? So we're living longer than we ever have, right? We're, people, what was it? Somebody shared an article that they did a study in Japan, and there's a book, and I can't remember the name of it, but may have actually been called The China Diet, which is the name of the book. But basically they did a research study in Japan that people now in Japan, and this is true for other economies, but Japan seems to be sort of the most aggressive and like accelerating this way.
Lives,
They're like at 75, they're living more like people that were 45 and 50, like, 2 or 3 decades ago. Like, the health is much better. The longevity is longer. They're living a much higher quality life. And so that's great. You go, oh, that's fantastic. But then you got to think about, okay, now my retirement money, my investment, my capital at work needs to last for, 20 to 40 years after you retire, right? And a lot of people don't think about that. They're, they're hustling and they're like more, right? And there's nothing wrong with hustle. I mean, I'm right with anybody, but you got to start to think about what's a specific number, how much time do I have left, what's the income I want to have when I retire, and how long does that need to last in retirement, right?
I agree. There's something that you mentioned about longevity, and it's an interesting subject because it kind of correlates with the product that you're building. When they did this study of longevity throughout different parts of the world, actually, it was in Italy. There was an island off Italy that had a bunch of centennials, in China and Japan, and there was one common thing all these centennials had was that they all had a purpose and they were living with their families.
Mm-hmm.
They weren't in a home. They weren't in an institution. They were living still at home.
Yeah.
Taking care of their grandchildren. They had a purpose, which is what your 5-bedroom product gives people. Gives a purpose for the grandparents to stay at home.
Yeah.
And the kids to live longer. So these cultures around the world have figured out, this is what causes longevity. And there's something about our housing in the United States that doesn't provide that. So what you're doing in the future and creating that, I think that people open up that, it is okay to have the, even though it's rough sometimes, but it's okay for the grandmas to live over and the grandchildren to stay over.
Longevity is longer, and also for middle and low-income families, the poverty rates in multi-generational families is vastly lower.
Yeah.
Like significantly, dozens of percentage points lower.
Yeah,
that's a huge deal.
Yeah. Thank you for that advice. It was not as simple, but it was very easy to understand. I appreciate that.
Okay, good. I work to make it easy to understand, but it's not simple.
I mean, someone just gives me sometimes a straight answer, but you really went into depth and it made a lot of sense. I appreciate your time, Scott. Scott, how can a listener get in touch with you?
So a couple ways. So if people want to go to our website, it's www.urbanpacific.com. We have a full investor education section, talks a lot about this, the difference between development and investment, but from an investor standpoint. Where there's a red sign up button on every page, hit that, get on our email list, and we put out a curated email every Saturday that's sort of a curation of all the reading that we're doing, all the different market trends, economic cycles, real estate trends, some of these demographic things we've mentioned, other sort of cutting edge type things. And we put that out every Saturday. And then if people want to find me, I'm on Twitter. Actually, it's probably my most active social media. So it's at Scott Choppin on Twitter. So find us any of those places.
All right, Scott, thank you for your time, man. I appreciate it.
Yeah, good to be here.
Thank you.